Greetings from TAUC. I'm Micheal, a principal lecturer. I've been teaching Malaysian tax for about 20 years. Today, I'll be sharing on the post-MCO and the frequently asked question on Malaysian tax. Hopefully, when you listen to this, we are already in the post-MCO. I'll address some of the frequently asked questions on Malaysian taxation. In the next few minutes, I will only highlight what I believe is the most relevant to you. The 4 FAQ questions that I'm going to address. First one, how do I know if I'm subjected to Malaysian taxes? Are there ways to reduce my taxes in Malaysia? Question 2. And question 3, what are the tax incentives offered by the government due to the COVID-19 pandemic? Last but not least, question 4. Why is TAUC one of the best institutions to learn Malaysian taxation? So this question you cannot afford to miss. Please stay tuned and listen to the end. For further details relating to your tax matters, I advise that you seek your tax consultant. So let's start with the first question. How do I know if I'm subjected to Malaysian taxes? There are a few types of taxes in Malaysia, just to name a few. Of the main one, the income tax, the real property gains tax, the service tax. It's important to put things in perspective as to why we pay these taxes. The Inland Board of Malaysia, the Malaysian Income Tax Authority, has this tagline, together building the country. Income tax contributes about 50% of the country's revenue. These taxes are used to fund the construction of roads, hospitals, schools, military assets for the securities of the country. In short, at the end of the day, the taxes are for the well-being of the rakyat. The general rule of income tax is this: all individuals, Malaysian or non-Malaysian, companies, Malaysian or foreign companies, will be subject to Malaysian income tax only if their income is derived from Malaysia. 2 simple tests to be fulfilled for a receipt or gain to be subject to income tax in Malaysia. First, the receipt or gain is income nature, not capital in nature. Second, this income is from Malaysia. In short, the receipt is not from outside Malaysia. So the Malaysian law that governs this taxability of income is the Income Tax Act 1967. There are specific Malaysian tax rules to determine whether an income is derived from Malaysia or from outside Malaysia. Yet, it's still possible for your Malaysian income to be tax exempted, provided some criteria are fulfilled. As a general rule, income from outside Malaysia, foreign income received in Malaysia is also taxable. But note, presently it's exempted for all individuals and almost all companies, except for a few specialized companies. Foreign income, which is not received in Malaysia, will not be subject to Malaysian tax. Let me give you a simple example. Just say you have a house in Johor Bahru and you rented out the house to your tenant. As a landlord, you earn rental income from Malaysia because the house is in Malaysia. Therefore, your rental income will be subject to Malaysian income tax. And if you have another house which is located outside Malaysia, let's say Singapore, the rental income you earn is treated as foreign income. This foreign income would not be taxed in Malaysia because it's not a Malaysian income. If you are working in Malaysia, your employment income from Malaysia is subject to Malaysian income tax. And if you are conducting business in Malaysia, for example, running a retail shop, working as a Grab driver, your business income is subject to Malaysian income tax. So to summarize, let's go back to the question I asked just now. How do I know if I'm subjected to Malaysian taxes? I'll be subject to Malaysian income tax if I earn income from Malaysia. Let me repeat. I will be subject to Malaysian income tax if I earn income from Malaysia. Let's change the scenario. Let's say you plan to sell the house in Johor Bahru a few years after your purchase, and you get a gain from the sale of the house. Will the amount be subject to income tax? The answer is no. It is a capital gain. It's not an income to you, and therefore it's not subject to income tax. However, you'll be taxed under another tax law, namely RPGT Act 1976. This tax law tax on gain from the disposal of real property, for example, the land, the houses in Malaysia. However, I'd like to caution you, if you're selling many houses in Malaysia over a short period of time, the Malaysian tax authorities will likely treat them as your business income and therefore subject to income tax instead of RPGT. Let's summarize on this part of tax. Let's go back to the question. How do I know if I'm subjected to Malaysian tax? How do I know if I'm subject to RPGT? Yes, you know. And you'll be subject to RPGT if you got a gain from the disposal of a house in Malaysia. The next question is what everyone would like to know. Can I pay lower tax? Are there ways to reduce my taxes in Malaysia? Are there ways to reduce my taxes in Malaysia? I give you 4 simple tips. Maximize your spending on expenses that produce your income. Generally speaking, expenses are deductible or allowable for tax purpose if the expenses are wholly and exclusively incurred in the production of income. If you spend on expenses, for example, quick rent, fire insurance, maintenance expenses for the purpose to produce your rental income, then the taxable income from the rental will be lowered by the amount you spend on these expenses. So be wise to spend more on expenses that directly produce your income. And if can, minimize the spending on expenses that does not produce that income. But if a company purchases a van costing 80,000, the company can claim a capital tax deduction of 80,000 over a period of few years against its business income. To note, this capital deduction, or we call it capital allowance, is only available for individuals and companies that have business income only. Second tips, give back to the society through charitable donation. A common one for individuals is give of money to approved institution. Assuming you are making a cash donation of 1,000 to Persatuan Bulan Sabit Merah, an approved institution by Inner Board, then your taxable income can be lowered up by your donation, but only up to certain amount, which is 7% of aggregate income. For Sendirian Berhad, the restriction is 10% of aggregate income. So different income tax rules apply to individual and companies. Very important tip, a Malaysian tax resident individual. Plan yourself to be a tax resident in Malaysia as opposed to be a non-resident because it comes with more tax benefit. If you're one, a Malaysian is not automatically a tax resident. Then how to be a tax resident? A simple rule is you stay at least 182 days in Malaysia in a particular year, then you are a tax resident. Yet, if you stay less than 182 days in Malaysia, you can still be a tax resident if you fulfill some other criteria. One of the main tax benefits is that you can enjoy the advantage of being taxed at the scale rate. At the scale rate instead of a flat rate of 28 or 30% in YA 2020. You will pay so much lesser tax because you are tax resident. As a tax resident, you will enjoy tax relief which will reduce your taxable income. Note, if you are a tax resident, you are given automatically $9,000 relief. And if your child is above 18, unmarried, and plan to study diploma in TAUC, you'll be entitled to $8,000 relief. For other relief, please take note of the restriction. For example, books, handphone, and computers. The limit is 2,500, which means that if you spend a total of 3,500, the excess of 500 will not help you to reduce your tax. So be very wise, plan your spending to an amount of not more than the limit of the relief. One of my favorite relief is the SSPN, Scheme Simpanan Pendidikan Nasional. You are entitled to a relief of 8,000, and this amount can help you to reduce your tax amount, especially if you are at the higher tax bracket of the scale rate. If your taxable income is not more than 35,000, then you are entitled to a tax rebate of $400. So be a tax resident to enjoy tax benefit. Before I forget, let me tell you, if you are earning an estimate of not more than, if you are earning an estimate income of not more than 34,000 a year, you do not need to pay tax. But if you earn more, you need to pay tax. Last tips, private resident exemption. Plan yourself to be a citizen and PR of Malaysia. If you are not, assuming that you are a citizen or PR of Malaysia. And what you can get is once in a lifetime, one chance, one opportunity to elect for RPGT to be exempted for one residential property. The example that you have just now is only on your house in Malaysia, not the one in Singapore. Let's come to the third question. What are the tax incentives offered by the government due to the COVID-19 pandemic? First one, donations. All contribution of cash and non-cash to the COVID-19 fund set up by the MOH, the National Disaster Management, will enjoy tax deduction. So whether you are donating the item or the equipment or cash, make sure you have the relevant receipt from the recipient as evidence of your donation for tax purpose. Second, tax relief. If you are a tax resident, you will enjoy a personal tax relief of 1,000 for your spending on your local travel. You also will be given digital vouchers for domestic tourism of 100 per person. So all these incentives here are to encourage you to consider, not to consider any traveling outside Malaysia in the near future. So be wise. Plan all your traveling to be within Malaysia. Enjoy the beauty of Malaysia and you'll get some tax deduction. Next one, service tax 6% exemption. You will not need to pay service tax if you stay in hotels in Malaysia from the period 1st of March 2020 to 31st August 2020. The next incentive, concession. There's concession given by Interior Board regarding your tax filing of your tax return form and the tax payment. The filing of all income tax return forms that falls between March and June 2020 is extended by 2 months. Individuals with employment income, the filing of tax return is now extended to 30th June 2020. Take note of this, 30th June 2020. Now that's the final deadline for those who are having employment income. For individuals with business, is now extended to 30th August 2020. For companies, they are given another 2 months from their due date to file their tax returns. For tax payment, if you are a businessman, your payment that you need to make for March and May 2020 now are extended to April and June 2020. For SMEs, they are given 3 months extension for tax payment due from April to June 2020. The above are just some of the main highlights which I believe are relevant to you. Last but not the least, the final question. Why is TAUC one of the best institutions to learn Malaysian taxation? TAUC is the platinum approved learning partner, world top 5% of the ACCA tuition provider. We are the only institution in the world to be accorded the special privilege to run the internally assessed ACCA Fundamental Skill Modules program. Taxation is one of the modules of the program, and the external examiner for taxation is from one of the big four. We work closely with industries, Deloitte, KPMG, EY, Pricewaterhouse, and others like BDO, through Harvard, to ensure that our programs are industry-driven. Our students did very well in the tax competition and ACCA examination. So let me highlight to you some of our student achievements. This one, the Deloitte Tax Challenge at the national level, since 2008. We were champion for 10 times. First and runners-up, second runners-up 13 times. DTC ACCA Best Presenters 14 times. Is the Ernst & Young Tax Professional national level, champion in 2018, first and second runners-up in 2019, and second runners-up in 2014. We not only did well in the national level, we did very well at the Deloitte Tax Challenge C level, Southeast Asia level. We were champion in KL, team champion in KL 2016. First runners-up for team and individual category in Jakarta 2018. And first runners-up for team category in Bangkok 2019. These winners of Deloitte Tax Challenge and EYTP were just simply amazing. At the point of winning the competition, they have not officially learned advanced Malaysian tax, professional paper for the ACCA examination. The winners were mainly students who have just finished their studying of the internally assessed fundamental tax paper. So these students may opt to take advanced tax as one of the ACCA professional paper, but they only study advanced tax a year later. The most notable one is this student at the international level or world level, Carlos Wong, first runners-up in the EYTP International Amsterdam 2018. A month later, after he won the competition at the international level, he began his study for the advanced tax professional paper. He graduated and became an ACCA affiliate in June 2019. Our student also did very well in the ACCA examination. Just to highlight, the ACCA June 2019, Yong Kajun top in advanced tax in Malaysia and number 6 in the world. It's the second top affiliate in Malaysia and 7th in the world. Thiam Wein obtained one of the top marks in advanced tax in Malaysia. It's the top affiliate in Malaysia, 6th in the world. On behalf of Thiam, I warmly welcome you to further your study in Thiam. Meanwhile, please stay safe and stay healthy. Thank you very much.